You have to follow a sound model and stick to that. And as a derivative, a default, as a consequence to doing that, you will see results. And those results need to be completely detached from emotion or psychological need, the necessity to be right. And it sounds hard. It sounds almost impossible right now, especially if you're new. But those of you that have gone through these experiences because you've traded with real money or funded account, and you got out there and you realized you knew exactly what you were feeling. It was a reminder that you did this too soon. But hey, we're here now. We are here. We showed up. Now we're going to show out. And unfortunately, you end up losing your funded account or you blow your account because you'll let that one losing trade do what? Take you completely out of the game. Now you have to do something bigger, much more monumental because you have to get a feel good moment. And you'll over leverage on the next trade, or you won't have a stop loss on because you want to be right. And you lose all clarity and you think that what you're doing in that next trade is going to pan out. You just have to submit to more drawdown, more time holding on to it. And what is happening is this: you are now holding on to a losing trade that you will not identify as, but you're going to be using the logic of your model, which is hold on to your runner. But because you took your eye off of the process of following that model, you're now applying part of the logic that you're using in trading, but you're holding on to the losing trade. You're submitting yourself to that trade, even though it's warning you and telling you, the analyst is talking to you, this is wrong. You know it's wrong, but you won't close it because you're not trading for profit now. You're trading for being right. You are arm wrestling the marketplace. That's what you're doing. You want to be smart in the eyes of someone else that you're going to share this with. And you're absolutely undermining yourself. And when you do more damage or blow the account, blow the funded account, your max loss day or whatever it is that takes you out of that, you will be miserable. You'll punish yourself. You'll relive those moments over and over again. And I can relive them all when I was 20, just like it happened yesterday. No one's going to be as hard as you are on yourself. You just aren't making it public knowledge to most of everyone that would be paying attention to you. Now, some of you make that mistake and you go on social media. Oh, this is hard. I'm always screwing up. You're inviting more people to confirm what you're feeling, which is going to do what? Anchor more weight to that negative result, which is going to do what? Create fear, anxiety, depression. And that's not how you grow. You have to know that what you're doing is not a pursuit of being right. In the very moment that you now have these impulses inside of you, that you have to prove something to yourself, or worst case, prove something to other people, you're not trading your model. You're not even trading soundly. You're gambling on the chance of you being right. You have to release all that. You have to stop doing that with your trading. You got to stop doing that with your studies. You have to submit to whatever happens as long as you're using the processes and protocols that you've adopted as your model. You're going to accept whatever the results are because you have done enough research to know that the things that you're trying to pursue repeat not just once in a blue moon, but they repeat almost daily, if not every day. Every day, the market's going to run for some hourly old high or an old low. This is the part where you start writing down notes, folks. Every day, there's an intraday range that has an old 60-minute high or old 60-minute low. In between where the market is at market price, whenever you're sitting down and looking at your charts, you want to identify them because there's liquidity there. This is the surest way for you to know that you can go in there every single day. Every single day, this is forming. There is not a day that this does not form. Okay? This is an everyday bread and butter logic. You mark out your 60-minute highs and lows. You wait for some shift in market structure that would be gravitating towards that old high or old low. Once you have a shift in market structure, using just what I taught in the 2022 model, you wait for a fair value gap. As soon as it trades into it, you engage. Half of the range from wherever you're getting in to that old high or old low, whether you're aiming for a bull move or bear move, matters not. As soon as it moves half of that range, half your trade comes off. Stop the break even. And you submit to whatever happens then. That's it. That's all you have to do. That is a complete model. Don't risk more than 1%. It might be 5 handles. It might be 20 handles. It might be 30 handles. How are you going to know? The range between where you're trying to buy and where that old high or old low is. That fair value gap exists every day. Liquidity above old highs and old lows, below old lows rather, that's there every day. And you're complicating things. You're trying to bring all these things that I've taught, hoping that they're all going to do what? Allow you to accept no losing trades and be right all the time. And being right is a poison to a new developing student. Your goal is consistency. You want to be doing the same things over and over again, using a model that delivers consistently. Doesn't mean it's 100%. It just means over a large sample size. What's that mean? 20 trades. 20 trades, you're at about 70% on side. That's a good measuring stick. But what happens if I'm not 70? You keep working until you are. And then once you get to that point and you're 70% strike rate, how could that possibly be, Michael? Come on. That's too high. It's unrealistic. All the books say, I'm telling you, don't read into those books. Those books are written by authors that has sold a book. That's what they're doing. They're selling you a narrative, a plot. They probably don't even trade with what they're writing about. I walk into these live markets, whether I'm sitting on Twitter tweeting out the very candles that we looking for in the draw on liquidity, bending time and space to precision, and you see your chart printing it later on. That's not hindsight. When I'm on the live sessions, I'm calling the minute candles, explaining what's going to happen and giving you the narrative. This is what you're supposed to be doing for yourself. You create these little laboratory experiments and you go in every day. Anytime you get a chance to study, that's what you do. And every time you record what you're feeling, how you felt. And the goal is for you to have indifference. You can't simply just write the word in your journal, I was indifferent to the outcome. You can't fake that part. You need to be observing where you're feeling these anxious moments where you feel like you're in troubled waters. They will materialize in the same places all the time until you cope with that. You replace it with a positive habit. What is that? When you feel it, you kill half the trade. If you can't cut it in half, you get it all off, done. And what that allows you to do is you reset mentally and emotionally that now, okay, I've paid myself. I've removed a great deal of the risk. I've profited from it. And now I have a free look. I got a free bus ride to get to my target if it wants to go there. But you don't know, and you're not going to know because you're now recuperating from what you just put yourself through, which was stress. If your trades are stressful, you're trading too big. Your risk is too much. The easiest solution to that, drop down in your leverage. I can get out there and I can find these 5-handle runs, 20-handle runs, 15-handle runs, 30-handle runs. And I'm holding on to 5 contracts, 10 contracts because Top Step says I can do 15. So I'm trying to push the envelope. I got things to do, ICT. But it's hard for me to hold a trade. So I get out too early. What am I doing wrong? You're over leveraging. You're trading too big. You haven't given yourself time to grow up into 5 contracts, 10 contracts, let alone 15, what guarantees you're going to blow your account. That's what they want. I want you to trade with 1 contract. Look what I did with the TD Ameritrade account last year. A double D account, trading 1 contract with lots of losing trades to showcase my students. I mocked up, drawdown, put myself in situations they asked me to do. This is what I do, and this is where I fall victim to it. How would I do that? I went in there and actually did it with real money. Took 25,000 to over 50,000, 5.5 weeks, 1 contract. Now, $25,000 a month, that's probably good for most of you, even if you are doing well. And if you could get just 1/4 of that consistently, that can change your entire life. Imagine if your mortgage was paid, half your mortgage was paid, half your mortgage and a car note and insurance. That's a blessing. But much like trying to make those ends meet, some of you want to just be able to quit your job right now and get away from Carl and Bruce. And you're rushing it. And you're thinking that as long as I'm right, I'll get there quicker. And quicker is not the right thing. You got to be on time. It's the same goal you have when you go to work. You want to arrive on time, in one piece, prepared to do your job. You can't rush success. You can't. It doesn't work that way. And placing so much emphasis, arriving sooner than what's realistic. Think about it. When I used to have to go to work in the morning time, I had pretty much a straight shot because I'd get up really, really early. Drive a 45-minute drive, 40-minute drive in 20 minutes, speeding, admittedly. But I hated going home because I would be in rush hour traffic. Think about what you do to yourself sitting in traffic. You know damn well there's 150 friggin' cars in front of the one in front of you. You know that. But your limited myopic perspective is this asshole's holding you up. So what are you doing? You're riding on his bumper or her bumper, looking in the rear mirror. Yeah, look at me, bitch. Look at me so I can tell you you're so-and-so. Everybody ready to get out, swing your tire iron, and break somebody's windshield because it's holding you up. You're trying to get somewhere. And these people are doing this intentionally. They're holding you up, and they're thinking about the same thing to the person in front of them. And that's what traders are doing when they get in the marketplace. They want to get somewhere too quick in impossible conditions. You lose sight of what you're doing. You get out there trying to prove to the world that you're better than somebody else, and you wreck your ass. turn your live streams off before they really end and go into a losing trade. It's all about. You know the score. They all have these problems. They're wrestling with it. You're wrestling with it because you're trying to do more than what's required. Follow the model. Follow the rules. Listen to the analyst in you. When it tells you you're in troubled waters, you do not flake out like you're in rush hour traffic, thinking that you're going to be able to bully everyone out of your way. What do? Oh, you got all these good advice, ICT. What do I do when I'm stressing out in the car? Listen to ICT. How about that? How about that? Because if you can listen to me, even if you don't like me, complain about me. Oh, bitch, you're a demo baller. We don't see you trading a live account in live. Go ahead, put your attention there. I'm a therapy. Okay. Because if you're doing that, you won't get yourself in some kind of road rage event and you'll probably get home safely and you won't be worrying about the traffic. You'll be distracted. And that's what the process does for those individuals that when they get in troubled waters and they're in their market and their trade is causing them anxiety. As soon as you take half off or close, if you can't do any partial half, what you have done is you've distracted yourself. You've removed that need to be right. But I could be making less money if it goes to my target. Yeah, you could. But what are you gaining? Peace of mind. You're engaging with a now resumed approach to holding no hard line. It has to be my way. When you first put the trade on, you may have had a clear vision about what it is you're expecting to see in the chart, how you're going to ride it to that profit objective, but something changed. And you have to be sensitive to that, allowing the analyst to speak to you through your conscience, say, okay, this is probably not going to pan out right now. So what we should do is take half of this off, roll to stop to break even if it's not already there. Or if you have it in a trail position, don't squeeze it anymore. Just leave it there. If it turns on you and stops you there, who cares? I show you that it happens with me. I'm doing that to teach you. I'm showing you that. I can get in the trades and do full pulls, and that's all I'm going to do. But I'm a practical teacher. I'm telling you how to grow into that stage. You just can't do it right out of the box. You can't. Your mind won't let you. And the people that are highly opinionated about how this stuff doesn't work, I can't do it, you won't be able to do it, you're going to fail, they're not providing anything as an alternative with consistency. So why the fuck are you listening to them? You already have enough on your plate. You know what you're wrestling with. So turn off all of that static, white noise, and listen to your conscience. Your conscience is going to talk to you. If you've been doing everything I'm telling you to do, it will guide you because of the experience you've placed in its hands. That analyst is going to guide you when it's troubled waters. But you have to let the analyst communicate to the trader in you, the one that's going to make the sound executions on the sound logic that comes from the analyst. The person that you're training with the back testing, the person that you're training to observe the opportunities in reading old data and watching real-time price action and tape reading, and in the walk forwards, and then finally doing a demo. Demo, that's when the trader arrives. He or she has no function in any of this until you get to demo. So the trader in you should not be talking about, I want to buy here, I want to sell here, I would do that, because that's not the trader talking. That's retail Rick. That's the gambler in you. So you've got three people inside of you right now that's going to be wrestling to be in the driver's seat. The analyst needs to be shotgun all the time. The analyst is right next to you all the time, and you're wanting to hear the logic that part of you, when it's time for your conscience to say, okay, you're in a position that's probably not as good as we thought it was. Do not listen to jokers and clowns out there looking for clout that tell you just got to have conviction for your trade. If you know that you're absolutely 100% uncomfortable and you are not able to focus on the trade, you are absolutely doing things backwards. And these same people, you never see them execute anything, not even recorded. They don't prove anything. They prove they have an opinion that nobody should listen to. There's this clout police force that's forming, and they're out there trying to keep your attention from learning how to do this. And you're seeing people now bring in real receipts with real money, and now they're uncomfortable because they don't have that. They don't have anybody proving that what they're doing or what they've done is making them any money. See, we're getting into the thick of things here now. The rubber's meeting the road, coming down to the brass tacks. And those that are submitting themselves properly are getting results. And all the old things that they used to be able to say about what we do here, they're finding that it's being met with a bulletproof vest, and it's wrecking ball proof, atomic bomb proof. You can't beat proof with real money, with real receipts, with real interviews from companies that pay these individuals. I don't own any funded account, so I'm not scripting anything. So they're doing something right. And that's the following of the process and the model. And you hear it in their own testimonies that they struggled, just like you're struggling too, but they kept pressing forward. I'm sure they saw all the things and hear all the things that all of you hear. You're never going to get it. This is becoming retail. This is never going to be retail. Look how many people talk bad about it. That right there is a testimony. As long as we got all these people hating on the idea, it ain't going to be retail. They want you to think that because they're insecure. They want you to feel like this is the worst thing for you to be doing. You should be following their garbage. Listen to their bullshit. Don't take partials. Trade animal patterns. Gonna wet my whistle here. You're probably wondering why I'm so low key tonight. Usually I go off the rails a little bit faster. I'm actually under some Benadryl. I had to take Benadryl. I had a little bit of a reaction. My wife made some kind of chicken shit. She was mixing kinds of stuff. She got that fucking TikTok. I'm telling you, I've wasted so much money at the grocery store because of TikTok. This woman watches TikTok, and every recipe that comes out, my house has got to make it. And she's got to ask me all the time, taste this, taste this. If she put something in there tonight, it caused me almost to not be able to do this. Kept coughing and coughing and coughing. So I had to take Benadryl. And I'm a little relaxed, almost to the point where I want to take a nap again. But I already took my 2 naps today. So that's our rabbit trail for this one. But you don't want to go into your trading constantly pursuing right. And you know already, most of you, doing that isn't getting you where you want to be. But you're arm wrestling with the results of you trying to do that. You think, well, if I just do a little bit harder, I'll get through that because this is how trading is. No, that's how gambling is. Look at the people. If you have the opportunity, go to a casino. When I had my first year anniversary, we went to Atlantic City and we stayed at the Taj Mahal. And I literally only took $100 down to the casino. That's it. Because number one, it was my first time at the casino. I've never gambled like that. And I said, in the event that I would take more money than I should, and if I win, I'm afraid that I'm going to get compulsive about that and say, I'm going to try to do it again and do it with more and more and more. So I purposely left all credit card, all debit card. I don't even use a debit card, but I'm just telling you, there was no means for me to take any money out of my bank accounts. It's just, this is what I brought, and other cash was for, eating and whatever. And I sat at that one on bandit slot machine, and every time I would get down to the last $10, I just want to lose it because I don't want to have to do this anymore. And I didn't want to do what? Get up and walk away. The analyst in me was saying, this is a waste of time. You're not going to make any money. And you're already just wanting to leave, but you're not wanting to get up because retail Rick is pulling the slot machine. But what happens if I get a jackpot? What happens if I win $2,000? The maximum thing I could have won on this was $2,000. And I would make it a little bit up to 75, 65, just under $80, getting back to the $100 that I put in the machine. And then all of a sudden, it would be spent down to the last $10, $12. And I'm like, okay, it won't be much longer now. And then I won't have it. I ain't got to worry about doing this. I can go watch the shows with my wife or whatever. And I'd win a little bit more, but it would be like to be $50 or $40. And then the gambler in me said, oh, I'm probably real close to one of those big wins. Let me just keep playing. And I sat down there for almost 7 fucking hours with the same $100. Couldn't make it go away, and I couldn't freaking make any money above $100. I never got it over $100. So I'm thinking to myself, this is stupid. Like, what the hell am I doing? So finally, I just did the maximum bets that it would allow me to do, and then boom, it's gone. And I was relieved that $100 was spent like that because I was like, okay, now I don't have it. I won't be enticed to do what? Do another run of that and get caught up in that whole pursuit of being right. That's how I learned this. The whole discussion tonight was that moment in 2022. I'm sorry, 2002 is when we went to Atlantic City. We got married Valentine's Day of 2001, and then a year later we were in Atlantic City celebrating it there, which was weird because I've never been to a casino, and that's where she said she wanted to go, so whatever. But this whole idea of removing myself from that, I applied that experience to the trading. When I start feeling like I'm listening to the wrong voice in my conscience that's telling me to be acting on impulsiveness, what if? See, the analyst isn't going to do, okay, um, what if you make more money than we thought? Or what if this is a trade that we hold on for a longer time? The analyst is never doing that. The analyst is going to speak through your conscience to you and say, this is the rules, bub. This is what you're supposed to be doing. This is all you're supposed to be doing. And when you step out of line, I'm going to remind you because it's going to feel like uncomfortableness. And that's not just fear of making money or losing money. That sometimes is the analyst that's been increasing in its understanding about what it is that you're doing in the marketplace. Don't cancel that out. Don't arm wrestle that because it's sometimes the experienced analyst that you trained up to this point in your development. And it's going to be communicating to you through your conscience by saying, this is not what we should be doing. We should be doing this. And then what you're doing sometimes is you're allowing retail Rick, the gambler in you, and the trader to argue with one another, ignoring the analyst, which is the sound advice that you should be following. So how do you deal with that? Your plan needs to be written out. When I take a trade, I have a notepad next to me. I'm literally writing down target, partial, stop won't move until it gets to this price. That's it. So if I see something, some little flurry of price action comes in. Boom. If it doesn't break the rules that I have written down for my idea, I'm not moving my stop. I'm not panicking. But it might cause a concern for me to feel like the analyst is saying, okay, we now are in troubled waters. What's the process? Half off. Don't move the stop anymore. Or if it's not moved to better the break even, move the better to break even, and then let it go. Submit to whatever happens. And that's how you condition yourself to not just run like a cat with its tail between its legs, fearful, because that's what would be the outcome. You don't want to just run away from any trade. At some point, you have to press into it. But it's easier to press into that trade that's uncertain now when you've taken half off. You've made money. You had a part-time job in that trade and you made money. There's nothing wrong with that. There's nothing wrong with that. And any fucker out there that tells you there is, they're not showing you anything, but they're telling you this is the advice that you should follow. Their shit. And they don't do anything to garner your respect or belief that what they're saying is sound logic. You don't see them signing into an account, going through day by day. This is what I made. This is what I lost. You don't see that, but they're highly opinionated. Who are you listening to? Are you listening to somebody that's going out there live on Twitter or in live streams and calling every fucking candle movement before it happens? Or are you listening to somebody that brings nothing but more confusion? If you're doing that, that's the trades. You're going to wrestle internally. It's going to be like chaff. You won't be able to focus order when you really don't. You're just placing too much stress because you're over leveraging. You're demanding being right. Easiest solutions. Cut half the trade off. You'll fix the over leveraging right there. You've funded yourself. You paid for that time in the trade. Your stop's better than even. And now you can submit to the outcome. I'm in a trade, ICT. I got this shit figured out. I'm in here. I got 5 contracts. I'm long S&P. I'm looking for a 20 handle run. Around 12 handles in. Whew, what are we doing here? Anybody got any ideas? What do you think? You think it's going to go up? Let's do a poll. As soon as you feel that, half off. But I got 5 contracts. Take 3 off. Why not 2? Take 3 off. Shut the fuck up. Take 3 off. You've banked 3. Let the 2 run. If it goes to stop, it's okay. If it goes to target, great. Next trade. You got to wrestle yourself into submission to the model. Otherwise, the market and your weaknesses will wrestle you into submission to failure. You won't see it coming. Nobody ever sees it coming until it's done. And you're like, man, I knew at that moment, right? You'll know exactly what it was. And you'll know and you'll admit to yourself, that was the moment I should have did this or that. Damn it, why did I do that? Now I got to do a funded account reset. Now I got to go put more money in the account. And it will repeat all the time until you do the things I'm telling you to do here. You're trying to graduate to a state of mind that when you go into the marketplace, you are at the state of mind that is when being right is no longer enough. You now are detail oriented. You're principle oriented. You're following logic. You want precision. Right is not enough. Your pursuit now is you want to control risk so impeccably that your winners are going to so far outpace your losing trades, it won't matter. It won't matter. The next trade that you lose on, it won't even have any impact at all on you. None, zero. People might talk about it in passing. Oh, yeah, you got to let your profits run, trade your plan your trade. This all sounds great. But how do they engage? Do they trade recklessly? Are you trading recklessly? Are you throwing everything out the window because now you have a funded account or a live account? The things that you were doing in your demo that were consistent, the only thing that's changing when you go into live funds, because it's still live data you're trading off of, the only thing that's changed is now you have potential reward and potential loss. And you have to grow into accepting that. And it's not easy. For some of you, it's going to be next to impossible, but you have to graduate into it slowly. Whatever the least amount of money you can put in on a trade, that lot size, that's what you trade until you're absolutely bored. And then you go up one more contract, trade like that until you're absolutely bored. And you do it again and keep doing it again and again until you can get to the point where, oh, wow, I can be in 5 mini contracts making $250 per handle. All I got to do is get 4 handles and it's $1,000. And you'll see that making $1,000 a day doing that is easy. But it's hard for you right now because you're going to feel what? As soon as you put a trade on with 5 contracts, you're thinking, shit, my ass is puckering. What is going on? I don't know if I'm supposed to hold this or get out. It's moved 2 ticks. Shit, it just moved 2 ticks. What am I going to do? 2 ticks. Am I long or short? What the hell am I doing here? Did I put the stop on right? You're going to be thinking about all kinds of shit. You're going to feel completely like a noob. What's changed? Potential reward and potential profit is the greed. Potential loss, potential debit to your account. That's your potential wreckage. Now, instead of saying, okay, is price confirming that it's continuously moving in my favor? And is order flow still on my favor in my own side? That's where your attention is. You're not looking at the profit and loss little button on your screen. How much money am I up and down, up and down? You do that, you're done. I just do that to show you eye candy to hold your attention in the early stages. You don't need to see that once you understand what you're doing because you can clearly see, okay, it's moved in your favor. Do the math. How many contracts could you have been there? And there it is. In the beginning, new traders, new students, they need to be entertained. There's got to be a hook in their mouth that draw them this direction. And I'm a master at that. Good songs, maybe not every song, because I'm sure some of you would have heard songs that I put in my videos where like, what the hell is he thinking putting this in there? It's not for you, it's for me. But I know how to draw a crowd. And once that crowd's there, I know how to teach you. But I also am aware that some of you are not teachable and you'll walk away before you should. And some of you, I'm glad you did or do because you're not prepared and you're just going to be toxic. But knowing what to do, when to react to it. When we react, okay, I saw this, I can't remember the guy's name. He's a YouTuber. He tweeted, your job as a trader is not to predict the future. It's to react to price. What the fuck kind of logic is that? Like that literally encapsulates retail trading right there. That's it. That's it. That is retail trading in a sentence. What you're saying by saying something like that, or if your thoughts are in alignment with that, what you're essentially saying is there's no way to know where price is likely to go. So fuck it, let's gamble. That's exactly what you're saying. Your job is not to try to predict price. Your job as a trader is to react to price. Get the fuck out of here. Listen, if you don't know where the draw on liquidity is, where the market's likely to be going up or down to, you're clueless. You have no business, zero business pushing a button in that regard. You don't have any business doing any kind of trading because you're literally putting a blindfold on, being spun around 50 times in the dark, stopped. It's okay. Take this tack, walk forward, and pin the donkey, pin the tail on the donkey game. But you're doing it disoriented. And you're reacting. What are you going to react to? When your hand hits the wall, okay, push the thumbtack in. Let's see what happens. Bullshit is what happens. These individuals that hold that logic, that's the reason why they struggle. And they have hit and miss results once in a while. And what keeps them in the game? Risk management. They suck at trading. Their trades are just terrible. The logic to get into the trade is lacking. But what keeps them in the game? Money management. But I'm a professional trader. I make my money from trading. Okay. Imagine if you learned how to determine where price is going and you kept everything else the way it is. How much better would you be? I'm interested in seeing that. But you have to know what we're doing is predicting price. We're predicting it. We're time fucking traveling, okay? We're literally moonwalking into the future, gaining insight and coming right back to where we are right then and sitting in front of the charts at relative equal high. If you can see it, that's the first step. You have to be able to see that that potentially is in the chart. It could manifest itself. Now, how it finally gravitates to there, does it go in one straight shot or is there two price legs into it, maybe three price legs before it gets there? That's not important. You're submitting to the idea that you are seeing this present price action. It's likely to go up to those relative equal highs where there's buy side liquidity. So you're submitting yourself to what? I'm in a buy program. I'm going to be buying discount arrays. I'm going to be observing price and looking to see if down closed candles support price and repel it higher. To the left of all that, if there is a range in price action, I want to see up closed candles being traded through. That's institutional order flow being bullish. You don't need a depth of market. You don't need moving averages. You don't need any of that shit. The chart will tell you everything you need to know. But you're not reacting to any fucking thing except for that internal voice that tells you you're in troubled waters. That's the only time you're getting permission from ICT to react to any fucking thing. You're reacting to your conscience. Your conscience is talking to you saying, hey, this is probably not a good idea now because you're not listening to me. And you and the gambler are arguing with one another. And I'm trying to guide us through this trade. And you are causing a decoupling. And now it's going to be physically felt with fear of missing out on the move, fear of being stopped out, disorientation. There's going to be a day, I promise you this, whether you've ever had an anxiety attack or not, this is going to happen to you. There's going to be a time when you have a funded account or you have real money at risk and you're in a trade out of nowhere. Your heart's going to start beating a little bit too fast. You're going to start hyperventilating. You won't really notice it until it starts. But then you're going to feel anxious. You may feel like you want to throw up, feel like you need to go to the bathroom. You're going to lose control of yourself or pass out. Feel like you can't breathe. Feels like you're not getting air, but you're hyperventilating and breathing too much. Start seeing stars. Feel like you're going to faint. Feels like the whole world is now laying on your back and you're in a trade while all that's going on. That's an anxiety attack. That's usually when the analyst is saying, listen, it's it. Like we're doing everything now to get your attention. So what should you be doing? Reacting. You need to react to that. But you need to be predicting the future and price. That's what we do as traders. Anybody, and I've seen this multiple times with other educators and such, anytime someone tells you your job as a trader is not to predict the price, get the fuck away from that person. They know nothing. They absolutely know nothing. They're full of shit. They can't do it, and they're just trying to justify their own ignorance. The fuck are you doing if you're not doing that? How are you not trying to predict the future? If you're bullish, what does that mean? That means you're a buyer. So you're what? You're predicting that price is going to go fucking up. What kind of shit is that? Your job is not to try to predict the future, but to react to price. No, 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 no. We are predicting where price is going to go. We are anticipating that prices are going to go to a discount when we're bullish. We're going exactly where the fuck we're trying to buy. We know exactly where our fucking stop loss is going to be. We know exactly why the fuck we're expecting it to go up. We are not reacting to shit. Period. That's just the fucking way it is. That's the reality. That's trading. That's the real shit. That's in the trenches, real fucking trading. Any fucking body that tells you anything apart from that, you unfollow, you fucking tell them to go fuck themselves and stop spreading misinformation. That's how you handle that shit. Period. That really fucking gets under my fucking skin, man. Like, I don't like that because that's ignorance. That's fucking class A fucking ignorance masquerading as fucking wisdom. Get the fuck out of here, man. That's fucking Sesame Street fucking wisdom. React to price. Get the fuck out of here. And you're probably listening to this, so do fucking better while you're in that trade. That's the surest time signal to you that you need to react to that as I need to bail on half the trade and just kill it. And if you can't, take the whole trade off. I promise you, in the first few times that you do it, it'll feel like, especially if it runs further, it'll feel like that's the worst advice you ever received. But I promise you, it will serve you better than anything else because it takes so much more for the human mind to go through that stressful endeavor of holding through that shit. When you're new, you don't have any experience. You have none. You're going through it. So yes, at some point you will have to submit to it. But initially, when you're developing, when you first get that first experience, you do not dig your heels in and say, I'm holding on for. You masked the moment. You've submitted to the trade idea up to that moment. But something is occurring and you don't know. I don't know if it's your experience that you've now gained that's trying to communicate to you through your content saying, okay, this is no longer a viable setup. You don't know that yet. So the first instances of this occurring in your development and you're in a live trade where you have real money at risk, you take half the trade off. I promise you that's the best advice that you're going to get regarding that moment. That instance of where you're in there and you feel like you're completely out of control. You can't focus. You can't come to the decision of get in, I'm not get in, but stay in the trade or get out. If you're in that arm wrestling match ever, and it's a live account trade when there's real money, and you are wrestling with, should I get in? Or I'm sorry, should I get out of the trade or should I hold on to it? If you are completely wrestling with that and you can't even focus on what price is doing right now, You're being distracted by that. So you won't be able to watch order flow. You won't be able to receive the information that price is going to tell you because you're watching the likelihood of you being right slip out from your hands. And that pursuit of being right overtakes the logic that puts you into the trade or would keep you in the trade. It doesn't feel clear at the time. You feel like you're losing your mind. And if you're in a panic attack or anxiety attack while it's going on, that makes it worse. But I promise you, 10 minutes after you close the trade or take half off, it goes away. You'll see things a little bit clearer. If you're in panic, if you're disoriented in a trade and you start worrying about whether you should stay in or get out, half the trade comes off. Walk away, minimum 10 minutes. Whatever's going to happen is going to happen. If it comes back and hits your stop, who cares? You're comfortable with that. If it goes to target, who cares? You were expecting that anyway. But 10 minutes. Because what happens is if you remove yourself from the stimulation that causes the anxious moment and what if thinking, you've now immediately reacted to the emergency that your mind's saying that you're in when there really isn't. There is no emergency. But you don't realize that at the time. So to master yourself and your emotions and the psychological warfare that you're putting yourself through is you take half the trade off, make sure the stop's at better than break even, and you submit to the rest of the move. Whatever happens, happens. But you must walk away, leave the room where your charts are, minimum 10 minutes. It's going to feel like you want to rush back in there and just peek and see what's going on. Don't. Do something else. Take a walk, go grab something to drink, stretch out. Let 10 minutes pass. All of the adrenaline, the cortisol, all those hormones that your body's releasing, they'll burn off in 10 minutes if you do something other than what you were doing, which is standing still like a Ferrari in park, but with the acceleration pedal down to the floor. You're tearing the engine out. It's not meant to do that. And the only thing you're going to do is keep that panic attack going until you're probably going to get sick, pass out, or feel like you're dying and call an ambulance for nothing. And between the time you call the ambulance because you feel like you're dying, you're having chest palpitations, tightness in your chest, tingling down your arm. I would always get this tingling in the corner of my left, like the corner of my left side of my mouth. It would start tingling, and it would be like this numbness, tingling feeling that goes right up, like you were drawing a smiley face on the right side of my mouth, from the corner up to my left eye corner. It would be like a pathway of numbness right there, and all that was adrenaline. Because I'm not doing anything. I'm sitting there, looking at my charts. What if this, and what if that, and what if this, and what if that, and I'm basically scaring myself, and I'm releasing adrenaline, but sitting still, doing nothing to burn it off. Your brain says there's an emergency. Fight or flight. Fight or flight. Let's get it on, or let's get the hell out of here. And what am I doing? Sitting still. Looking at something that I'm constantly telling myself there's an emergency. I need to make a reaction and decision. What are we doing? And I'm doing nothing. I'm what if thinking, what if thinking, and what if thinking. And then finally, cortisol. That hormone's released in my bloodstream. And now I start feeling physical symptoms. Chest tightness. I'm breathing faster because my brain's been told there's an emergency right now, and I've released adrenaline. Now my heart races faster, and cortisol is a stress hormone that once it hits your body, you're completely in a different state of mind. You will start feeling physical symptoms. Palms will be sweaty. You'll start maybe trembling. Dizziness because you've blew off all your CO2, but it feels like you're not getting oxygen, but you're just too low on CO2. You blew it off. The exhaling, too much. You ever see the people breathe into a paper bag? What that does is it helps regulate your blood